came back into the market in a very big way.
What we know now is Wall Street can bring down Main Street.
People are seeing this, and those memories of fear are coming back.
When you have a 401k or a 403b, those kinds of accounts, they are incredibly susceptible to downturns.
The Dow Jones Industrial Average dropped more than 900 points. More than 900 points.
There are questions about how to best save for retirement.
Part of the problem is confusion.
Time keeps on slipping into the future.
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule. And that's all the rules there are.
When the market goes up, you go up. When the market goes down, you don't go down. Save Money Radio, your money safe and sound.
Welcome to Safe Money Radio with your host, Brad Pistole. Brad is a retirement and income specialist, primarily serving Springfield, but he's sought after nationally for his expertise in helping people secure their retirements. Mr. Pistole is a licensed life insurance professional in the states of Missouri, Arkansas, and Kansas, and he specializes in working with people who are near retirement and those who have already retired with wealth management, income planning, and asset protection strategies.
Save Money Radio, your money safe and sound.
And now, here to talk with you about securing your retirement, your host, Brad Pistole.
Well, hello everyone, and thank you so much for joining us again today for Safe Money Radio. I want to begin by asking you a question, and I want you to be honest with me and with yourself. Don't you lie to me. Have you ever broken your New Year's resolution? What about this year? Have you broken it yet? How many days in are you? Did you make it past the first week? Well, you know what they say about the power of doing something 21 days in a row. That's when a habit starts to form. So if you've already broken your New Year's resolution, like I have, don't worry. It happens to all of us. Just start over and try to stay focused for the next 21 days in a row. And let me tell you why keeping your New Year's resolution is so important. On January the 1st, 2024, a local story made national news. A very special couple from St. Louis, Missouri celebrated their 80th wedding anniversary on 1/1/24. That's right, their 80th. They were married the year my father was born, all the way back in 1944. What an incredible accomplishment to be married longer than many people live. But that's why this story is so powerful, and here's why we all need to pay attention to it. The fact is, we are all living longer. Those New Year's resolutions about losing a few pounds seems to be working. This couple from St. Louis, who's been married for 80 years, are now 102 and 103 years old. They have 6 children and 16 grandchildren. And here's the part that should really get your attention. The husband, Andrew, retired from the civil service back in 1980. Just let that sink in for a minute. He retired when I was 9 years old, and I'm 52 years old now. He's been retired for almost 44 years. Can you even begin to fathom how hard it is to make your retirement income last for 44 years? Andrew retired back in the good old days of pensions. So he's probably been blessed to live on Social Security, a pension, and his investments. But 95% of you listening right now will not have the benefit of a pension. I don't have the benefit of a pension. Defined benefit plans are a thing of the past. In today's world, we have defined contribution plans. So what's the difference? Well, it's simple. A defined benefit is just that, an incredible benefit. And back in the days of DB plans, if you worked for a company for 40 years, you retired and received a lifetime pension. Not anymore. Employers don't want that monkey on their backs. So they did away with DB plans and started DC plans. Now the monkey is on your back. In a defined contribution plan, if you contribute the money, they will match a portion of it, usually 3 to 4%. But if you don't contribute to this plan and you work for a company for 40 years, they don't owe you 1 penny the day you retire. You probably won't even get an office party when you leave. It'll be just like any other day at that company. That's why America's IRA expert, Ed Slott, calls this a yo-yo economy, because you're on your own. When you retire, you will only have retirement income if you've taken the time to contribute to your own retirement plan. Now, if you've been listening to this show for very long, you might have heard me talk about this next topic on the previous show back in 2023, because there is a major landmark event that's taking place right now throughout 2024. It's being referred to as Peak 65. So what is Peak 65? Peak 65 involves the massive number of people who will turn age 65 in 2024. It's estimated that 12,000 people a day will turn age 65 in 2024, and that number is expected to be around 4.3 million people. Now, can you imagine for just a minute what type of economic impact this will have on our country? Now, I know this isn't the case for every person turning 65, but it is the case for the majority of the people turning age 65. They're retiring at that time. So just think about this for a minute. They're going to leave the workforce. They're going to stop contributing to Social Security, and they're actually going to do the exact opposite. They're going to turn on their income stream and start taking distributions from Social Security. So that means no more money being contributed into Social Security for approximately 4 million new people each year, and millions of new dollars will start being drawn out of the Social Security Trust Fund every year. And this is going to continue for the next 19 years. Massive numbers of people, more than 10,000 people a day, will continue to turn age 65 every single day. They're going to stop their jobs. They're going to turn on their Social Security income. They're going to turn on their pensions if they're one of the very few people that have them. They're going to start their annuity payments. A lot of them are going to be downsizing and selling their homes. They'll move into smaller locations. And guess what that means? Do you realize just how many people in this country have children and grandchildren and great-grandchildren living with them in their homes? That's probably not going to happen once these people retire. For a lot of retirees, their income decreases and they downsize from their current home. That's when the trend reverses and many parents move back in with their children instead of it being the other way around. It's going to impact millions of people. That's why I want to spend some time today talking to you about the second half of the game. If you're anywhere near retirement, you're now on the back nine, and you need to be thinking about the kind of retirement income plan that you have in place. Is it going to last for 44 years like it has for the couple in St. Louis who's been married for 80 years and have lived past age 100? Stay with us. We're going to be talking about the second half of the game and what happens if you make it to overtime. Friends, our number is 866-780-SAFE. That's 866-780-7233. We are retirement income certified professionals, and we specialize in helping people move into their retirement years and keeping their money 100% safe. We teach them how to protect themselves from the ups and downs of the stock market. We teach them how to protect themselves from things like 2001, 2008, 2020, and 2022, and we protect them from black swan events. We also teach them how to establish contractually guaranteed lifetime income that they can never outlive. The majority of people today retire without a pension benefit, but you can create your own pension by taking an asset like a 401k or an IRA and rolling it over into the type of accounts that are protected and guaranteed for the rest of your life. Friends, we insure our homes, we insure our cars, we insure our boats and our motorcycles. Why in the world wouldn't we insure our greatest asset, our retirement accounts? Since I have to take a break, now would be a great time to call me for a complimentary copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. And I'll also give you a copy of my Safe Money Kit. My number is 866-780-SAFE. That's 866-780-7233. Isn't it time to stop exposing your retirement to market risk? You're listening to Safe Money Radio with Brad Pistole.
How am I going to explain all that money?
You're listening to Safe Money Radio. Do you own an annuity? Do you understand what it does, how it works, and if it's right for your retirement plan? Some annuities have fees that might not be justified by their benefits. Some annuities are exposed to significant market risk. Worse yet, if an annuity was sold without proper planning, it can cause unintended consequences for your retirement. If you own an annuity, it's probably a good idea to find out more about how it works and if it's right for you. It's time to give Brad Pistole a call now at 866-780-SAFE. That's 866-780-7233. Brad will help you review the features and benefits of annuities you currently own without any obligation. Once again, you can call Brad now at 866-780-SAFE. That's 866-780-7233. The market goes up and the market goes down. It always has and it always will. But if you are in or near retirement, do you have the time to wait for the market to go through these cycles? Think about it. Having your money invested in the market is like walking next to the edge of a cliff. What if you lose your step? What if the edge gives way? What if a strong wind blows you over the side? It is good to stay away from the edge of disaster in life, and when it comes to being exposed to financial risk, it is no different. Shouldn't you at least try to protect the money you depend on for your retirement income? Pick up the phone and call us now to receive your complimentary Safe Money Information Kit and a copy of Brad's best-selling book, Bulletproof: The Safe and Secure Retirement Income Plan. Our phone number is 866-780-SAFE. That's 866-780-7233.
This is what is commonly known as money.
Safe. Show me the money. Money.
Is this a game of chance?
Radio.
Not the way I play it, no.
You're listening to Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio. I am a capital preservation and strategic income planning specialist working with clients right here in Springfield and Ozark, Missouri. Friends, on today's show, we're talking about a landmark event that is happening right now. It started in 2024 and it's called Peak 65. Now, they're calling it Peak 65 because more than 12,000 people will turn age 65 every single day in 2024. It's estimated that 4 million people will turn age 65. I recently heard Elon Musk say this: do you know how to know when your country is aging? That's when you sell more adult diapers than you do baby diapers. And for the first time in history, that phenomenon is starting to happen not only in the United States, but in other countries like Japan and China. 2024 is going to be the peak year for the number of people turning age 65, and it's going to affect so many things you would never even think about. Now, I know when you were younger and when you were working and you started your 401k, you probably felt like you were never going to have enough money saved for the future. But before you can blink, you turn 30, and then you turn 40, and then you turn 50, and finally started to see the value of your 401k getting to a respectable place where you might think, okay, well, maybe I'll be able to retire one day. But friends, I'm here to tell you, as a retirement income certified professional who speaks to retirees all across the country, many people have grossly underestimated the amount of money it's going to take to retire and live a worry-free retirement. That's what we all want, right? The ability to retire and not have to worry about ever running out of money. There is a 4-letter word that never lies. That word is math. More people than ever before are having to return to the workforce because they failed to plan properly during their retirement. These are people who focused on the first half of the game. Now, you know what the first half of the game is, right? If you love college basketball, it's the first 20 minutes of the game. If you love football, it's the first 2 quarters. If you love golf, you call it the front 9. And let's be honest, for the most part, the first half of any game doesn't matter that much. Well, sure, I mean, it's important to play well on the front 9, and it's important to play well in the first couple of quarters. But how many games have you seen get determined in the last minute of the game? Heck, we all remember what happened when the Bills played the Chiefs in recent years. Patrick Mahomes only needed 13 seconds at the end of the game to destroy the Bills' playoff dreams. How many Super Bowls have you seen that were decided because of a play that happened in the last 5 seconds of the game? It's not how you start, it's how you finish. It's not how you drive, it's how you arrive. I'm sure you've heard any golfer who understands the game say, you drive for show and you putt for dough. In the game of golf, what happens 500 yards from the hole doesn't matter nearly as much as what happens 50 yards from the hole. Just ask any PGA professional. Sure, the driver is the funnest thing to watch, but have you ever noticed how many of them leave the driver in their bag, sometimes for the entire round? That's because the short game is what matters most. You see, being in the fairway and being able to approach the second half of each hole is what matters. You better be good with your wedges and your putter because 70% of the scoring takes place around the greens. So here's what I want you to do today. I want you to think about your retirement accounts for the next few minutes. If you're nearing retirement, have you made any changes to your current plan to adjust for the second half of the game? Remember, in the early years, it's okay to be aggressive and to be focused on returns. That's the front 9. And contributions and earnings are really important during this stage of the game. But once you're on the back 9, you don't need to be pulling out the driver trying to John Daly your way onto the green. Once you start the back 9, it's time to use a driving iron and make sure you stay in the fairway. Trust me on this, you don't want to start approaching your retirement from 2 feet deep in the rough. You want a nice lie in the fairway. Friends, I have more than 1,500 clients all across this great nation, and I have an increasing number of people who are above the age of 90. I have several clients who are above the age of 95. That means they've lived for 30 to 35 years beyond their retirement date. Friends, you need to be sure you're working with someone who is an expert at making sure you never run out of income before you run out of life. If you're just trusting your financial professional will be able to keep sending you distributions from your 401k every month for the rest of your life, no matter how long you live, and your accounts are variable accounts that go up and down with the markets, good luck. The math and the research from the people who have their PhDs in economics say you simply must have a portion of your retirement money invested in something that's contractually guaranteed to pay you for the rest of your life. And that's exactly what we specialize in here at Safe Money Radio. Call us anytime at 866-780-7233. That's 866-780-SAFE. We will give you a copy of our Safe Money Kit and a copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. This book teaches you how to take a portion of your savings and roll it into something that's protected and guaranteed to pay you for the rest of your life, no matter how long you live. If it sounds too good to be true, I can assure you it's not. That's why I personally own 7 accounts like this. It's why world-renowned economist Tom Hegna owns 11 accounts like this. It's why Dr. David Babbel owned 14 accounts like this. Call us at any time. We'll tell you exactly how it works. Our number is 866-780-7233, and we will give you a free financial consultation when we meet. Well, I must take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
Lobby, there's only one way to protect our interests.
Safe Money Radio.
The hills rely with the sound of money. Thank you.
Are you concerned about long-term care? You're also probably concerned about paying the high cost of long-term care coverage and increasing rates. Some long-term care rates have increased by as much as 40%. Thanks to recent changes made by Congress, you may be able to use non-qualified tax-deferred retirement money to pay for your long-term care tax-free. Some hybrid long-term care annuities or life insurance solutions can even double or triple your funds available for care. If you have non-critical health issues, you should still call us. Some insurance products have simplified underwriting, and a simple telephone interview will determine your qualification. Call us now if you want information on this opportunity to use tax-free money to pay for your long-term care. Our phone number is 866-780-SAFE. That's 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Thank you for tuning in to Safe Money Radio. I am Brad Pistole, a market risk mitigation specialist helping clients with retirement money preservation and income planning. Friends, on today's show, we've been talking about what started happening in 2024. It's an event called Peak 65, and this event actually occurs every single day. In 2024, for the very first time in U.S. history, more than 12,000 people are turning age 65 every single day. It's estimated that 4 million people will turn age 65, and that means 4 million people will stop earning income. 4 million people will stop contributing to Social Security. 4 million people are going to start taking Social Security distributions. 4 million people are going to start taking distributions from their 401ks and their IRAs. And don't forget, these 4 million people aren't the only people doing this. In previous years, there's still been tens of thousands of people turning age 65 every single day, and this phenomenon is going to continue for the next 19 to 20 years. So you better be able to make sure that you're prepared for the second half of your life, or what is known as the back nine. Now, any of you who play golf know these things to be true. I played college golf, and I realized that I understand more than the average person when it comes to golf. I love the game. I had it down to a science. Many years ago, back when I was skinny and before I owned my business and had time to play, I was a truly legitimate 2 handicap. My lowest round ever was a 7 under par 65. I shot in the 60s regularly, and if I shot over par, I wasn't a happy camper. That was a bad day for me. I won a lot of tournaments during my golfing days and was blessed to play in and win a lot of tournaments with my father. Those are some of the best memories that I have with my dad. I used to get asked all the time, how did you get so good at golf? But no one liked the answer. You see, back in my late teens and my early 20s, when all of my buddies wanted to take off and go play 18 holes, I usually spent the first 2 hours over at the putting green and the chipping green and hitting balls out of the sand trap. A lot of times I would join my friends on the back nine as they were making the turn, and inevitably I would beat them by 4 to 5 strokes on the back nine. They hated it. But I learned this early on regarding the game of golf. It's not how you drive, it's how you arrive. The wedges and the putters are the most important clubs in the bag. That's the most important parts of the game of golf. It's where all the scoring takes place, and I became a master of the short game. Now, maybe you're listening right now and you don't love golf, you love basketball. Well, if so, you understand how important free throws are, and the team that's going to win is the one who can make their free throws down the stretch in the second half of the game. And maybe you love football. If so, you know how important it is to make your field goals and your PATs. How many games have been decided by 1 point because a team missed their PAT or a field goal at the end of the game? When it comes to your retirement income planning, you really need to be focused on the second half of the game. What happens in the second half of the game? Well, that's when you stop contributing to your accounts and you start taking distributions. And if you've listened to the first segment of the show today, I talked about a couple from St. Louis who were married for 80 years. They've been retired for 44 years. Will your current retirement plan last you and your spouse 44 more years? Friends, as a certified financial fiduciary and a retirement income certified professional, I'll be very honest with you. You simply must be prepared for the back nine because a lot of you are going to end up in overtime. Overtime is what happens when you get to the end of the game, but the game keeps on going. That means you budgeted to live to age 80, but instead you ended up living to age 90 or 95 or yes, even 100 years old. And guess what? They don't give you discounts because you live too long. You still have your expenses every single day, and during overtime, it's often even more expensive because of things like medical expenses, surgeries, prescription drug costs, and long-term care. When was the last time you took an honest look at your current retirement income plan? Are you prepared to live 30 to 40 more years on what you have saved? And not just you, what about your spouse? Current statistics suggest the average spouse lives 14.2 years longer after the death of the first spouse. Do you want your spouse to struggle financially once you're gone? What if they lived 14 years after you died and you were the primary income winner in your home? What if you only pass on 50% or worse yet, none of your pension because you took the higher payment up front? Do you have a plan in place to replace this income? Is this plan guaranteed? Is it backed up contractually by an insurance company? Friends, if you've never heard of anything like this and you didn't know it existed, today is a very special day for you. I cannot communicate to you enough the importance of the back nine, the importance of the second half of the game, the importance of finishing strong, and the importance of protecting your family with tax-free income from life insurance, Roth IRAs, and annuities with guaranteed income riders that last the rest of your life. This is what we specialize in. We do this every single day for thousands of people all across the United States. Call us anytime at 866-780-7233. We'll give you our information absolutely free. I'll give you a copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, and we can get together anytime for a free financial consultation. And I will show you exactly how this would work in your specific situation. We will have you take what we call the Retirement Income Style Awareness Profile that was created by my good friend Dr. Wade Pfau, who has his PhD in economics. And when you take the RISA, the Retirement Income Style Awareness Profile, it will tell us exactly what your retirement income style is, and that will be the building blocks for setting up the perfect retirement income plan for you and your family. Just call us at 866-780-7233. There's someone standing by right now to take your call. Well, I must take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
There's a lot of money out there. I'm trying to get my hands on some.
I want that money! You're listening to Safe Money Radio.
Money in the bank.
When was the last time you did a beneficiary review on your life insurance and annuity policies? Did you know that many non-qualified joint annuities have incorrect beneficiary designations that completely bypass the joint annuitant from receiving death benefits? Another major mistake made on beneficiary designations can cause your death benefit to be subject to estate taxes or probate. This is something you cannot fix once you die, which is why you should call us now for a complimentary review of all life and annuity beneficiary designations. Your loved ones depend on this money. Let's make sure your money goes where it's intended. Our phone number is 866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
Welcome back to Safe Money Radio. I'm Brad Pistole, a certified financial fiduciary and a safe money retirement specialist. Thank you so much for joining us again on Safe Money Radio. And you might be listening right now, but you also might be watching us on YouTube. You might be listening to our podcast. A lot of our shows that you hear on the radio, you can also watch online. You can go anytime to Apple Podcast, to YouTube, or to Spotify, and you can just type in Brad Pistole and Safe Money Radio. So depending on whether or not you like to listen, or if you like to watch, if you want to be able to rewind and go back to certain key things that we are talking about on the show, then just find out what works for you best and then go do that. You can always find us 24 hours a day, 7 days a week. That's Safe Money Radio with Brad Pistole. And as you know, we are the longest running financial planning show in the Ozarks. We've been on a lot longer than anyone else, almost 15 years now. And we've had key guests on our show in recent years, even in recent months. People like America's IRA expert, Ed Slott. People like world-renowned economist Tom Hegna. World-renowned Social Security expert Heather Schreiber. We've had Dr. Wade Pfau, Dr. Michael Finke, Dr. Alex Margia. So if you want the source for key retirement planning information by the world's experts, you found the right place. And today we're going to be talking about something that you do not want to miss. So stay with us. And remember, you can always call anytime, 866-780-SAFE. That's 866-780-7233. If you want a copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, or if you want a copy of Ed Slott's book, The New Retirement Savings Time Bomb, we have autographed copies, so just call in anytime. But with that being said, let's jump into today's show because we're going to be talking about the joint owner on your retirement accounts. And that was not a mistake. You heard me correctly. The joint owner. Here's the thing. America's IRA expert came to Springfield, Missouri for the first time ever. He speaks all over the world. He speaks at Fortune 500 companies, and he was right here in Springfield. We brought in Ed Slott to speak on September the 12th, 2023. We had a sold-out crowd at the White River Convention Center. More than 100 people attended. We had 50 people on a waiting list, and we provided this event absolutely free of charge to everyone in the Springfield community. And here's the thing that Ed said that shocked a lot of people. You know, they came up to him after the event was over and he was signing books and autographs and talking to people about their retirement accounts. And everyone kept saying, you know, you totally got my attention when you asked the question about who the joint owner was on my retirement account. Have you ever thought about that? You know, see, normally when I'm talking to someone or if Ed's talking to someone, he'll say, hey, let me ask you this. How much of your account do you own? The common answer is, of course, well, I own all of it. No, let me rephrase that. How much of your 401k is yours? Well, all of it, right? No, it's not, actually. You have a joint owner on that retirement account. If it is a 401k, a 403b, a TSP, a 457 plan, an IRA, or any other type of tax-deferred account, you have a joint owner on that account. And I can guarantee you, you're not going to like all the details that come with that joint ownership. Who is the joint owner? Well, the joint owner is Uncle Sam. And as Ed Slott will say, guess what? He's not even your real uncle, but he does own some of your retirement accounts. And here's the thing. He gets to dictate how much of your account he owns. That might be 12%, 22%, 24%, 32%, 37%. And let's go back and look into history. That's right, the all-time highest federal tax bracket, 94%. If you don't believe me, just go look up those stats and look up the year my father was born, 1944. Look for the highest federal tax bracket, okay? Here's the thing. You put your money into a tax-deferred account, and remember, you took a tax deduction up front, and you deferred that tax for the future. And who determines the rate of tax? Your joint owner, Uncle Sam. And don't forget, you also owe money to your state, unless you're in one of the very few rare states that don't have any state income tax. So most of us, when we started off in our careers, we were told about this wonderful thing called a 401k. You need to put your money into the 401k. You're going to get free money. Remember this great match they're going to give us. And back in the glory days, it might have been as high as 7 or 8%. And then it fell back to 5, and then it fell back to 3. And now with a lot of companies, there is no match. Truly, it's a yo-yo economy. You're on your own. If you don't save it, you won't have it. But even when you have that match, remember, you are post-dating that tax. You're saying, I'll deal with Uncle Sam on down the road. And Uncle Sam, your joint owner in these accounts, has all kinds of rules for you. No distributions before 59.5 without a 10% penalty. It's also taxable. Remember, there's going to be rules that start for you when what used to be age 70.5, and then it changed to 72, and then it changed to 73. We already know that it's going to change to age 75 in about 9 years. Those are called required minimum distributions. Yes, they are required even if you don't need the money. And your joint owner, Uncle Sam, is going to tell you how much you have to take and when you have to take. And he's also got all kinds of special rules for your spouse and for your non-spouse beneficiaries, your children and your grandchildren. You know, I personally believe this is where the term roll over in your grave comes from. It's for those of you who work your entire life and build this nest egg that you think belongs to you, and then you find out after you're long gone that because of improper distributions, you were working with the wrong advisor, they didn't know, your wife didn't know, your kids didn't know how to take the money back out the right way, and you gave the majority of your retirement money to Uncle Sam in taxes, federal and state. Many times, Uncle Sam will get more than 50% of all of the money that you saved your entire life that you thought was going to go to your wife, your children, your charities, your church, but the right planning did not take place. That's what we specialize in here at Safe Money Radio. Both myself and my son Hunter are RICPs, Retirement Income Certified Professionals, through the American College of Financial Services, and you've seen the long list of key guests that we have on the show, talking to you not just about how to get the money into your accounts to make good earnings on the money, but more importantly, how to get the money back out of those accounts in the most tax-efficient way. If you would like to read a copy of a book that is really about financial planning and guaranteed lifetime income, and the key thing about how to take it out in the most tax-efficient way, just call us anytime. It's 866-780-SAFE. That's 866-780-7233. I'll give you a copy of Bulletproof, the Safe and Secure Retirement Income Plan, absolutely free. And remember, America's IRA expert Ed Slott wrote the foreword for this book. Call us anytime at 866-780-7233. There's always someone standing by to take your call. Since I have to take a break, now would be a great time to call me for a complimentary copy of my best-selling book, Bulletproof, the Safe and Secure Retirement Income Plan. And I'll also give you a copy of my Safe Money Kit. My number is 866-780-SAFE. That's 866-780-7233. Isn't it time to stop exposing your retirement to market risk? You're listening to Safe Money Radio with Brad Pistole.
Is your money sitting on the sidelines in a CD, savings account, or money market account, earning less than it could? If you have your money in a bank, the value of your money is getting destroyed by inflation. Don't let low interest rates get you down. How would you like tax-deferred growth higher than what banks offer? Why let a bank pay you less when you can currently get 3-year and 5-year fixed annuity interest rates of almost 6% tax-deferred? Some fixed annuity contracts even let you access as much as 10% of your account balance surrender penalty-free. Call us now for your short-term money solutions at 866-780-SAFE. That's 866-780-7233. Fixed annuities are backed up by the claims-paying ability of the issuing life insurance company and are not FDIC insured. We have software to help you choose from hundreds of highly rated life insurance companies. Call us now at 866-780-SAFE. That's 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Thank you for tuning in to Safe Money Radio. I am Brad Pistole, a market risk mitigation specialist helping clients with retirement money preservation and income planning. Now, friends, if you're just now joining us on the show today, we have been talking about the joint owner on your retirement accounts. And I know if you just joined us, you might be thinking, well, wait a second, I don't have a joint owner. I have an IRA. And what does the I in IRA stand for? Individual. Now, if you really want to shake up your advisor and see whether or not he's worth the salt, ask him what IRA stands for. He will tell you individual retirement account, but that is not true. An IRA is not an individual retirement account. If you don't believe me, pause the show right now if you're watching and just go to irs.gov and type in IRA. You will find out that it stands for Individual Retirement Arrangement, not Individual Retirement Account. And what is this arrangement? This Individual Retirement Arrangement is what we're talking about on today's show. You see, you have an arrangement with Uncle Sam. He's the joint owner. When you reached out and shook his hand, he slapped cuffs on you, and you are now cuffed to Uncle Sam for the rest of your life, unless you find the special key to unlock those handcuffs. And I can show you exactly how to do that, how to get rid of Uncle Sam for the rest of your life and take him off as a joint owner and a primary beneficiary on your account. But let me do this today. I love to share stories. You know, I've been on the radio for 14 years. A lot of you watch and listen to my podcast. Let me share a story about how this fleshes out in real life, because none of us like having Uncle Sam as a joint owner. You probably have something that means a lot to you. I own 3 farms. I talk about it a lot. So I own a farm in Kansas, Missouri, and Iowa. Now, why do I own these farms? Well, I live at work. You see, Monday to Friday, I'm here. This week, I was here 3 nights past 7 o'clock. I have 1,300 clients. I've written and structured more than 2,000 annuities and life insurance policies. That's a lot of customer service. That's a lot of people to take care of. But let's not forget, I'm also on the radio 5 times a week. I have podcasts. I have YouTubes, all that are going on all across the country. I have clients all across the country. And here's the thing that separates me from everyone else. I write every single one of my shows, every word. That takes a lot of time. I am never away from my job. Even if I'm driving to a farm, I'm recording a radio show through an app somewhere. So here's the thing. I purchased my first farm in 2014. And here's what I learned about how unique our world is right now. I did not purchase any of my farms in my own name. For tax purposes and for protection purposes, I purchased them in the name of an LLC. And within 1 week of the date that I purchased my first farm, I had someone call me at the office and wanted to talk to me. And our staff is pretty good about making sure, someone that's calling, I've got the right time to talk to someone. And here's what happened. I get on the phone, I don't know the person, and they said, "Hey, Brad, I'm your new neighbor at XYZ Farm, and I just wanted to ask you some questions." And I'm first floored by this. First of all, I haven't told anyone about this farm that I just purchased. I didn't even purchase it in my own name. And then they proceed to ask me all kinds of questions. Well, why do you own this farm? Well, what are you going to do with it? Just all kinds of personal questions. And here's what I realized. This person had to have gone to the courthouse. They would have had to have looked up the information about who purchased the farm. They would have found that it was owned by an LLC. They would have had to have researched that LLC to find the name connected to it. Then they would have had to Google my name. Then they would have found that I own a business. Then they literally had the nerve to call my business during a workday to interject them into my life to ask me about my personal business. Let me tell you what, we live in a very unique world. Now, I wish we could go back to the days of front porches and talking to neighbors and everyone loves everybody, but we don't live in that world now. We live in a totally different world. So when someone calls you out of the clear blue and starts asking you questions about something that should be completely private, it kind of freaks you out a little bit. And that neighbor then went on to be very specific about the fact that the previous owner had let them hunt and fish on the property, had let them ride their horses on the property. And they wanted to know what I was going to let them do and not do, because a new sheriff was in town and they wanted me to know that they were kind of the old sheriff, even though it wasn't their land. That really bothered me, and I've had to deal with several things like that, but that is exactly what's going on with your retirement accounts. You don't realize it, but you've got a neighbor that's right there that might even come let himself inside your gate, which has happened, and drive themselves right up to the doorstep of your house and say, "Hey, what are you doing with that money? What do you?" And you're going to say, "Well, what do you mean? What am I doing with it? That's none of your business." And you know what Uncle Sam's going to say? He's going to say it absolutely is my business. You see, I've got all these rules for this account that you signed up for. You signed up for this account and said, "I am willing to participate in this 401k." this IRA, this 403B, this TSP, and I am going to take a tax deduction now so that I can deal with it in the future. But see, none of us think about the fact that we're going to have to deal with that in the future. We are a live for now kind of people. We just know we want this free match and this tax deduction, and so we keep making contributions to the accounts. But Uncle Sam is there. He is the joint owner. He's the nosy neighbor, and he's going to say, okay, I tell you what, I will let you take out distributions. I will let you take out your own money as long as you're over 59 and a half, or you're a first-time home buyer, or there's a certain kind of illness and there's medical expenses, or, all this long list of things. And you probably don't like that, and you probably don't ever think about it until you end up in one of those situations. But if you have ended up in that situation, like many people who've called into our show over the years, they've said, I used to have a 401k, but I had some things happen. I lost a job. I had to move. I needed a down payment for a home, and I took it out of my 401k. And I paid the tax on it, and I paid the penalty on it, and all the list of rules and regulations that go with that becomes their reality. Are you comfortable with having a joint owner on your 401k and your IRA on your tax-deferred retirement account that you have intended to be for you and for your family? If you're not, there's a way out. You have to know the right way out. There's a way to get out, and there's even a way to get out of that arrangement and never pay tax on it. It is 100% legal, and I can tell you less than 1% of all financial advisors know how to do it. You have to be working with the right retirement professional. If you want to find out how to get rid of Uncle Sam, if you want to find out how to protect your money and keep it safe, if you want to find out how to develop streams of guaranteed lifetime income, then you need to give us a call. Remember, I've been working with America's IRA expert, Ed Slott, since 2010. He wrote the foreword for my latest book, Bulletproof, the Safe and Secure Retirement Income Plan. Both myself and my son Hunter are retirement income certified professionals through the American College of Financial Services. We will sit down with you, find out what you've got going on, and we will come up with the best retirement income plan for you and your family. And we will be focused not on how to get the money into an account, but how to get the money back out of the account in the most tax-efficient way. Call us anytime at 866-780-SAFE. That's 866-780-7233. Just ask for a free copy of the book. Ask for a copy of our Safe Money Kit. We will mail it to you absolutely free. And you can even set up a free financial consultation when you call. We do not charge fees to meet with you, and we will be more than happy to help you any way that we can. Our number again is 866-780-7233, and there's someone standing by right now to take your call. This is Brad Pistole, your host of Safe Money Radio. I'll be right back after this informative message.
When was the last time you did a beneficiary review on your life insurance and annuity policies? Did you know that many non-qualified joint annuities have incorrect beneficiary designations that completely bypass the joint annuitant from receiving death benefits? Another major mistake made on beneficiary designations can cause your death benefit to be subject to estate taxes or probate. This is something you cannot fix once you die, which is why you should call us now for a complimentary review of all life and annuity beneficiary designations. Your loved ones depend on this money. Let's make sure your money goes where it's intended. Our phone number is 866-780-SAFE. That's 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio. I am a capital preservation and strategic income planning specialist working with clients right here in Springfield and Ozark, Missouri. Now, friends, before the break, we were talking about Uncle Sam being a joint owner on your retirement account. And I know you probably don't like that thought. And if you don't believe it's true, just go to any tax-deferred account you have right now and take a distribution. You'll find out. You're going to get 1099'd on that distribution, and guess where that money's going to go? To the feds and to the state. Try to take a distribution before age 59 and a half. You'll find out how many different rules and regulations and how much control Uncle Sam has over you and your retirement accounts. You know, there's all kinds of horror stories that come from tax-deferred accounts that get passed on to people when the beneficiaries do not know how to touch the money and the financial professional does not know how to touch the money. So I want to focus on that in this last part of our segment today, because here's what America's IRA expert will say. He will say, take a guess at how many financial professionals know all the rules and the laws that come with tax-deferred accounts. He will say 99%. It's not that high. He said it's higher than that. It's not even 1% that know. Less than 1% know. So here's the thing to think about. How do you find these people? Well, you can find these people by going to IRAhelp.com. That's Ed Slott's personal website page. And you can look for Find an Advisor. I've been listed on that page for the last 14 years, starting my 15th year in 2024. This is highly trained individuals, about 450 of us, who constantly study the laws regarding 401ks, IRAs, and any type of tax-deferred account. And we specialize not in just getting the money into the retirement accounts, but how to get the money back out in the most tax-efficient way. We would love to give you a copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan. All you have to do is give us a call, 866-780-SAFE. That's 866-780-7233. We want to make sure you understand you have a joint owner on your retirement accounts. And that joint owner is greedy and nosy, and he has got all kinds of rules that he's going to make you and your spouse and your non-spouse beneficiaries deal with. Hey, those rules don't end when you die. He passes those rules on to the spouse, and he passes even more stringent rules on to your non-spouse beneficiaries, your children and your grandchildren. So friends, if you have tax-deferred accounts, 401ks, IRAs, TSPs, 403bs, 457 plans, you need a retirement income certified professional working with you to make sure you keep that money out of Uncle Sam's hands. Greedy little hands. And remember, he's not even your real uncle. Call us at 866-780-7233. Ask for a free financial consultation. We will get you headed in the direction of safety and guaranteed lifetime income. 866-780-SAFE, and there is always someone standing by to take your call. Well, I'm about out of time, and I would like to thank you for listening to Safe Money Radio. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulation while reducing exposure to market losses. Thanks for listening, and until next time at the same time, I'm Brad Pistole, reminding you to stay safe so you can step into a secure future.
Safe Money Radio, your money safe and sound.
You've been listening to Safe Money Radio with your host, Brad Pistole. Find out how to contractually guarantee that your hard-earned money is safe while avoiding market loss so you can have the retirement that you deserve. Call Brad Pistole now for your complimentary Safe Money book and Safe Money information kit at 866-780-SAFE. That's 866-780-7233.
Safe Money Radio, your money safe and sound.
The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Guarantees are based on the financial strength and claims-paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you are just taking the first step towards protecting your retirement. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program are subject to change without notice.